The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technicians Hour. I follow the 9 o'clock. This is Tommy O'Brien kicks us off with the morning market kickoff. So this is the Tuesday, 18th edition of the Tiger Technicians Hour. Dow's down 573 at 46,020. This is going to be very important because for the very first time since it crossed positive back around about the 20th of October, the 9-period moving average has actually gone pink. That says and suggests very strongly that's on the day. So I have to wait until 4 o'clock before I can confirm that the pink 9-period moving average is in fact confirming the sell mode that we're already in. But the weekly chart has a very strong 914, and that's going to only change if the Dow starts to get to 44,300. And so far, with this, the intense selling that we've had suggests to me that, let's just go to GE for the moment. Yeah, GE is just taken out at least the first support, but the major support level, it's down 268 to 297, is right here at 294, I think, 294.80. 294.80, if we close decisively under that, you start to get into the low 290s and then 280s. I'm watching this very closely. Now, I'm just suggesting that the kind of sell-off that we've had, there's a lot that I'm looking at that suggests that a huge chunk, maybe 2/3 in some areas, has already been accomplished, and there's about another third to go. And the way I'm looking at it, let me go to this right now. This is something that I've discussed over and over and over again for maybe 10, 12, 15 years, that there's a certain moment where there are enough external economic and social activities that could in fact impact the market, and it also includes yields. For a very long time, right up until end of last year, maybe the beginning of this year, we were looking at yields as being a factor. But from that February high, I've used this particular technique to say we might start to see that yields are not really the problem. There are other things. Well, the high that was January the 31st, where you got an internal high, then a residual high, and then you went down to the residual low of the 7th of April at 36,611, where we started to do a lot more buying. Then you had these little internal highs and a residual. So what is an internal high and a residual high? So this yellow chart of the Dow, I use this kind of as a backdrop, and really what it says is I treat this as a Chapman wave dark news cloud cover. I tried because there is a dark cloud cover that is a candle that you look at, and people got confused. I thought I'd change it. I call it the dark news index. Now, I like my the nomenclature that I give to my different techniques to actually describe the 914 that describes exactly what we're looking at. When the 9 is over the 14, it's still green. When it goes under it, it goes pink and it's negative, and it explains it. So this is the dark. When there's dark news, very often the market just kind of ignores it. The news media might make a big deal out of it, but actually the market is just saying, nothing to see here. But every once in a while, it all comes together. So on that internal high that was made back on the 29th of October at 48,040, we were looking at the Middle East conflict. We were looking at tariffs, et cetera, et cetera. This one here I call everything else, because all of a sudden you're getting everything put together. So this is the internal high. What is it? It's where you got an earthquake, and then you get the residual, the aftershock, and that can be lower, the same, or more than the earthquake. And I just treat it as an internal high and a residual high, or an internal low and a residual low. And I mentioned that this goes right to the Chapman Wave inside track repellent zone. I don't want to draw two lines. It's just two big lines here, which is the up channel we've taken out. We just nicked it yesterday, and today we took out decisively the up channel base. So we've got the internal high, we've got the residual high, and I'm suspecting this is going to be a conglomerate. Look how minor the pullbacks were in each of these cases. But look at this. We're almost, and I believe we should be testing the 45,470, 45,452 low of the 14th of October in this one at least. That's the way I'm looking at it right now. So we're done with this chart, internal high, residual high. We'll be waiting for internal low and a residual low. I'm looking at this and I'm saying there's a lot of ugliness here. I mean, I can choose many, many charts and you'll say, whoo. But the one that really is important to me is this one right here. And that is just in terms of market indicators. Let me go to this. Now you can see it. I corrected it. I don't know what was wrong yesterday. But you see the high that was made last month between the S&P. This is pink. Is the S&P Financial Index, the Financials Fund. That's the XLF. And the SPY is in blue. And look at each one of the lows and highs. It's just been a remarkable. I don't think you can find a closer correlation between an index and the S&P or the Dow and the S. This is amazing. Look at that. So what? And in fact, if I use the Dow made a new high this month. So that would be a divergence. It does happen, but look how coincidental all the lows and highs are. So this is a monthly chart that just two price points. One is pink, the XLF. The other is the SPY, SPY. Amazing what information it can give. I said I'm a little nervous about this because although I'm calling this a brand new leg A to the upside in the monthly chart, I have to watch closely because if everything comes together negatively, we could take out the low of, say, the week of the month. Oh, that was the month. August low of 615 in the. It has SPY and SPY. Yeah. So let me just check that out there. Yeah. Okay. So it's trading right now at 658. Yeah, you could take that out. But in the meantime, very short term, the 10-20 time frame is coming up. We've got another 7 minutes. I'm anticipating there's going to be a bounce. I don't think it's anything like the bounce of the last 2 days, but I do think it's a bounce. So the E-minis is 65.25 on the 1 minute chart. 66.53 is the first real resistance point. Somehow in the next hour or two, it should try to get there. If it can't, we're going to look at a very ugly close. But in the meantime, I think there's an oversold condition. Let's look at the volatility index. Now, what's really interesting about the volatility, I haven't finished all the indices. I got carried away there. The VIX index, I typed in the wrong place as I usually do. Oh, did I mess up? Ugh. Oh, God. Here we go, VIX index as we go to the break, and then I'll come back and I'll finish all the indices. Yes, look at that. VIX index has gone to 25.71. I think we're getting very close to an oversold condition. See, this was the airline cuts, government funding. That was the last one just a week and a half ago. This one, which brought my daughter and her partner.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, we're back. So just before I go on, I had a question about something that Dan wanted to know about SRE. Please, I am long. So, and then Duncan Steve says SOXS be the winner again today so far. Yeah, that's the inversion of the SMH. So this is, so Sempra Energy is SRE. Energy infrastructure, distribution, natural gas, electricity. And if we look at natural gas, I mentioned this the other day. I didn't do anything for subscribers because I'm always very suspicious of this natural gas. But it had a beautiful, I knew I missed something. And I was going to go back and correct it, and I didn't. There's your C, and there's your peak D, fourth highest peak in the Chapman Wave methodologies, where other things can happen. And lo and behold, this daily chart is now pulling back quite sharply from the 200-period moving average. It's at 4.25, down 10 cents. So let's just go back to what we're looking at, SRE. Look, SRE, now, I discussed this before, and I mentioned that it was a huge peak C and a sharp pullback. Now, there's a technique, and I need to show this because this is like, is this apocryphal of what we might be looking at in the general market? I don't know, but I'd said that that was a peak C. The MACD had started to turn down. The stochastic was very weak. The on-balance volume rallied, and then it went very weak. The relative strength was still holding pretty well, but that 9-period moving average was fantastic. But I'd said, I'm watching this closely because if there can be a peak A and a B and a C and it goes just a tad and you have a combined overlapping wave, that should take you to at least a peak C. So that what happens is, peak D. So this C here that stopped on the 8th of October at 95.72, then you pull back to about the 89 area, and then you make under it, you make a gray A, a gray B, a gray C. Then, I don't remember when we looked at this, but I might have said it then, but what would have been is that I said there's a really strong possibility that if you go over this gray C, and it starts a leg D, that D should go over the previous high of 95.72. And then you've got to be careful. Well, you got your leg D, but it became a blue leg D because you've got A, B, C, D. Once you get to a D, it's always blue. It means that you fulfill the obligation in the Chapman wave of getting to a buy mode without taking out the left side low. And now look what happens. This is the 9-period moving average has just gone negative for the very first time since it broke above it way back. I mean, this is amazing when it was down in the 81 area on the 11th of 9/11. On 9/11, it crossed positive green, and it hasn't changed to pink until this very second. With the days young, it should still recover and go back to green, but it looks like it is trying to turn down. So the question is, you see that what happens with this, if this goes underneath 89 in the next week, I have to then put a down arrow. It negates that peak C and fulfills the obligation of getting to a D. And that's exactly, I'm going to use it just, I'll tell you in a minute, I'd be very careful that if it closes under 89, that it could actually go down to 88 and then 86. If you're in way earlier than that, the monthly chart is in this rectangle. It looks like it's digesting gains. It looks like, yeah, let me just say that without breaking into the 93, 94 area in the next, what's today, Tuesday, by Friday, I'm going to suggest to you that you've got to be a little careful, and that this is where I would say, take a little bit off. Be pleasantly surprised because it still goes higher, but you've got your core position. But I just say, if it takes out today's low of 90.66, start to take a little bit off. Why? Now let me show you why. Because look at this. If these are all leg A's, let's just go to the S&P for a moment. If these are all leg A's, underneath it, we could pull back, say, to 6,013. That's the pink 9-period moving average. By then, of course, it'll be much lower, but right now, that's where it is. And then under it, you can have, in a monthly chart, a peak A, and then a peak B, and then a C, and even a D that doesn't take out the high of 6920.34 that was made on October the 29th. And that cancels that A and makes it a peak D, and you've got to be really careful. This is a perfect, I was looking for one. I better write it down because I'm liable to get SRE, example of restart to D at previous high A to C. It hasn't got to the D. Okay, very good. So now, with that said, we've got a lot to do. I want you to just explain something about, first I'm going to finish. So run them again because I don't even know where I am. Indu, the Dow is down. I think it's starting to try to come back. Let me just see. Indu is down. This is the Dow down 469 at 46,120. It made a low this morning of 45,948. And that means just under 46,000. Now it's trying to go above it. I think there's a chance that there's not as great a rally as yesterday, but there is going to be some kind of rally. And maybe even tomorrow while we're waiting for NVIDIA. And boy, NVIDIA Wednesday night, there's economic news Thursday morning, 8:30. We could see something going into Friday or Monday that is for the textbooks. But I don't know. I think a lot of these things have really tumbled. I mean, like a Robin Hood goes from the 150s to the 110s. Oh, no, broke 140. I mean, that's a huge move. Is there another move like that to come? I don't think so, not yet. All right, so Dow is down 500. S&P is down, here we go, down 65 at 66.05. The leg C to the downside. The QQQ, did I do this? QQQ is down 8 1/4 at 595. Leg D to the downside. Broke the trend line, but it's holding the 14-period exponential weekly support. The IWM, did I just do that? IWM is trading down 65 cents, 56 cents. Actually, not too bad at 232. The chart is not very good, but the price today is actually not too bad. But that weekly is starting to weaken a lot. WEEK is going to the WEAK. Now let's go to SMHs, very important SMHs, trading down 8 1/2 at 331.7, a new daily low, and that's a leg E to the downside. This is from 372 down to 329. That's a pretty darn big move, but it hasn't taken out the low of early October. Now let's go to gold. Gold is down 15. The GDX is trading down at 4,058. The GDX is trading at GDX is up. The gold miners are up 14 cents to 75.12. I just think it's stuck in this lower range for the moment. Silver right now is trading at Silver's trading down 34 cents at 50.37, 374. I believe that's going to turn into a peak G. And you're looking, remember, I was going to do this yesterday and I started it. And now I said I'm going to just wait to see what happens. Now I've waited. So look at this. The technicals here on this right side test in the 54s. Did it hit 55? 54.41. It was 4 sessions ago, just above the previous high, but it didn't close above that high. So this is holding the lines over the 14. That's good. The manganese weak, the rental strength is weak, stochastics is 66 weak, the on-balance volume is weak. So I'm watching silver very closely, because if it takes out 40, what is the low here? If it takes out where the 9-period moving average went green, that was the day of the 10th of November at 48.23. I think it's stuck. Actually, I do think in any case that gold and silver have had a huge move.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This is very interesting because I was asked a question about in Tiger YouTube about let me see. That says, Basil, what would be your left side, right side technique on the VIX index? Well, I did it on other things, but let me just do it on the VIX because this is the one that you should work on because it gives you a sense of timing. Now, I don't use the VIX. It does have a Chapman wave connotation only because I always put the letters in, but it's an emotional thing. My notation for the letters is just what's there. But you can see it can fail at a peak A or a B. And lately, for this year, it's been doing Ds, like tariffs, that big one that was in April that gave us the April 7th low. The week of the 11th of April went to 60.11. I should have put that in, right? 60.11. 60.11. That was a leg D, went to a peak D. Now we're in another, in the weekly chart, we're only at a B, but I don't really use that. What I am going to say, and also for height, I think that the VIX is going to go even higher than the 28.99 high of the 17th of October. But what I do have is if I do this just using my basic technique, and I don't even know what it is, it's just a chart, I have an inside track. Right now, it's just hit the resistance of the inside track, Chapman wave inside wedge, inside wedge, target dashed green, upside target resistance line. Today's high is 25.71. It's trading right now at 24.75. And this goes on and it concludes on the 28th of, when is that Thanksgiving? 28th? How can that be? Oh, that's the Friday after Thanksgiving. I wanted to talk about that. What a nice coincidence. So this is, and it says above 28.99, but that part of it is not so much as important as the timing. So it says by the 28th of November, if this is correct with my plumb line right there at the high of the 22.72 airline cuts government funding session of the 7th of November, that's what I'd get. If it does plunge right now, 22 to 20 is going to be support for the VIX index. If it holds above that into late, this is only Tuesday, and we only had one day, so this is kind of premature, but I was asked about it and I did it. Next question was fix. So let me just do this before I forget. So this is fix, and that is that comfort. What is it? Fix. What is it called? So comfort systems. I was going to do that today, and I've decided I won't do it. There's just too much else to go on. This would have been included. Comfort systems. Leg D in the monthly chart. Peak D in the weekly at 1,020.26. Didn't I talk about this the other day? So the Chapman wave falling axe, and it is filling in the gap. And isn't that interesting? The high of the gap start of the 22nd, no, it has to be the next day, is 836.32 and 841.66 was the low 3 sessions ago. So question about this. Yeah, I looked at this. I always wondered, how's it doing so well, comfort systems? And actually, it's not comfort, it is comfort. And I remember looking at this. Let me just do this for 1 second. I'm going to go to, I'll just go, which one is open? This one here. There, okay. So comfort, C-O-M-F-I-T, systems, I'm always surprised, appears to refer to several different, systems, I should have put that in, USA, does There you are. A wide range of services related to building and mechanical systems, including construction, installation, and maintenance of HVAC, electrical and plumbing systems. I always, when I saw it, I thought comfort, which is comfort, No, this is comfort. And it fits perfectly in the environment we're in. The 9-period moving average just went negative. It's down 5 at 914.76. I suspect it's going to fill the gap, and it's going to test, when this is all over, it will have tested the low of the 22nd of October of 770.47. 770, which means that it will, nothing makes sense here. The low is 770.49 on the 22nd of October. Oh, there it is. So it's that low. So first of all, it has to take out this low of 841.66. So 841 is the weekly low that was made last week. If it takes that out, the low of the 24th of October, the week of the 24th of October, is 770. The upside is limited to this trend line, which is 948. That's way above. It's 932 is the moving averages. They just flipping negative right now. So 932, 913 first resistance. We're at that right now. Sorry, is a little bit of a support. 932 is the resistance. Would I hold this? Now, you didn't ask me the question, but I'm going to say to you, let me have a quick look to see if you've updated it. What is your view? My view for 2026 is that this is in play. It first has to digest all these gains. It's filling in the gap. That means that it fills the gap, and then on the way up again, it needs to get into the midpoint of the gap, and that would be around about 904. If it can get to the 900s after coming down into the 800s, and then hold on a weekly basis and just tag once 1,000, then you're looking at 2026 going towards the 1,100, 1,150 level. But it first has to get, let's look at this later on. I don't like to make those estimates looking out because, hey, this thing could drop to 600. That makes 1,000 really difficult. So let's do one step at a time. I do think the weekly and monthly 9-period moving average over the 40 is so strong that I think 2026 it should go higher. Next thing we're looking at here, let me just have a look at this here. So that was fair. Did that question? I think I missed one in the den. Yeah. Does it have a peak at Nike? NKE. Now, I always have a trouble with Nike, except for the very first time in a long time, just for my particular style. Not that I ever wear. I don't think I've got anything from Nike. I like the designs of the clothes when I walked by the store just recently for the first time. Didn't like the whole thing for quite a while, but of course it was going to highest. Well, I didn't like it. And then it started coming down very sharply. And I think the clothes, for me, are just much better. That's got nothing to do with the earnings, etc. So that's a peak. What's the question? Yeah, I can hear the music. Those hedges have started to call position for January. Okay. I'll be back in a moment. Basil, Chapman, Tiger Conditions Hour. I think I hear the music. Down 562 in the Dow, down 74 in the S&P.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So in terms of Nike Inc., B shares, sports and sportswear, I think the 58 level is really critical. If it closes under 58, I see no reason why you can't be looking at 55 to 50 before this whole sell-off is over. So I love the fact that you did that, was it a spread? I don't remember what you did, but you did something for the short side. I closed all hedges and started a call position for January. Earnings come mid-December. Yeah, I think that makes much more sense to me. Yes, okay. So I agree. Well, I don't think the downside's finished. I mean, look at the weekly 9.14. Look at the MACD. Look at the stochastic at 10%. That's flat, not rallying. Yeah, I think there's still downside, but I like your concept of what you're doing there. Next question came up. Let me just do this before I forget. So TLT is trading up 23 cents at 89.32. That 200-period moving average of 89.09, it's like a magnet until we can push into the 90.45 area. That it's going to be a magnet. But look at this. The TBT has gone to that leg D, and now it's a peak D. And that's just suggesting that maybe a chunk of the upside action in the yields is done. I don't want to talk about that. I'm just saying right now it's made a peak deeper. The 9's still strong. The MACD is strong. Stochastic's at 88%. That's hinting towards higher yields, not lower yields. Okay. Now, a question came in. Once again, I forgot. FXI. Let me do that. We did fix. Now we're doing FXI. Down 29 cents, right on the border right here. Oh, I can give it a little bit more because it's this low here of 39.02. It's at 39.38, down 29 cents. I just think it's done for now on the upside, and it's just digesting gains. This is the iShares China Large Cap ETF. So we've raised cash. We're one of our highest cash positions. We did have a trade yesterday. I would like to say it's a dumb, well, I wouldn't like to say, but I would have to say it was a dumb trade. But actually, everything about it was very positive over the last 3 days of rallying, and then it just took a dive yesterday. So we took a small loss, a little more than I like, and the one that I loved and I didn't get into was J&J, and it's holding beautifully at 199.71. There are a number in that area. So I had a question. Where did I put the question? Yes, Basil, have you looked at the stores at the retail sector. I forgot about that. So the one I usually start with, one of them has Amazon as a big weighting and the other one doesn't. I think it's the iShares that doesn't. Yeah, there's the XRT. Ooh, I haven't looked at this for a while. Ugly. So it makes this peak D. Remember, peak D is where other things can happen. Well, look at that sharp seller for peak D, just under 90 back in going into September and before October came around. I drew this in and I completely forgot about it. I didn't even type it in. I just did look at that. I drew this in to say there was an instant. This is a technique for those of you who do Chapman wave methodology and understand my instant restart, but you also know that I have a thing called the Chapman wave flat base. This is unconventional flat base restart. It just explains the whole thing. And what it says, usually after peak D, if you go within 3 bars to an E, you can automatically say E/A, E/ and quietly say A, and the next one's F, quietly say B, and then you get to G, quietly say C, implying that it should go to a D after an instant restart. But if it has a nice leg A, E/A, and then it comes down and takes out the trough that really started the peak, the leg E, and then it goes on to higher highs and it keeps choppy, anticipate that it's kind of going to come back. In this case, why didn't I type that in? And why didn't I remember it? What a beautiful short that would have been. Look at this. I had this left side, right side price time match. Look at this. This is the S&P Retail XRT. And this would have gone to there. And this would have gone to there. And look at that left side. Look at the number of bars. Look at that bar symmetry. Beautiful to the peak D high. How silly is that? I just haven't looked, haven't even updated it. And what did it do? It went from a high of 89.41 on the 17th. Right now it's trading at 78.29, below the 200 moving average. Look at all these dreaded H's. And the weekly chart, it's just made lower lows and lower highs, and the monthly chart's at a peak E, but much, much higher than that D of 2024, around about June, I think it was. And now we're pulling back. This is going to be very important because this could be a demonstration of that single leg A to the upside that pulls back, and then under it has this, just like we saw in FIX. I'm going to watch this very closely. All right, so I missed that. That was dumb. And the RTH, haven't looked at, that's the Van Eck Vectors. Yeah, Vectors Retail ETF. Trading at 246.94, down 205. And this one does have Amazon, I believe, as a big weighting. It's gone to an alternate account G/B. It could even be a G/C. Let's just put a G for the moment, okay? And an E in the weekly chart. And what did it do here? I haven't even finished this. Good grief. Oh, thank you for reminding me, Don. Could be C made a D. There's your D. So because Amazon's involved in this, it's not pulling back quite as sharply. Isn't that? Look, that what previous was a peak G, unusual peak G. This is a peak D. Okay, so... Okay, that's very important. Thank you so much for reminding me about that. So the retail index daily on the RTH is just going to a sell signal right now. The weekly chart hasn't got anything yet. It's still looking very good. Let me just show you. And this is all very important. On Wednesday night, we get NVIDIA. I'll go to NVIDIA in a moment. That's tomorrow night. Thursday, we get whatever it is, economic report. Makes Friday really important, right? And look at the XRT. Woo-hoo. XRT. Trading way down from the high that was made at, what did I say it was? 80. Damn, I didn't write it in. 89 something, 40, 89? 89.41. So I better put it in. 89.41. We're trading right now at 78.33. 89.41. There we go. Okay. So, yeah, this is that's already in a sell mode in the daily. Sell signal got upgraded. Well, last week would have been upgraded to a sell mode. And the weekly chart hasn't even got a sell signal. The monthly chart hasn't got a sell signal yet. So there is a difference. All right, I'm going to be following these very closely, and we'll see what happens after that. But thank you for reminding me to look at this. It's just important. As I was looking at Cintas yesterday, it looked almost like the retail stock. Look, made a double top 229.24 high back in May, June. And then all of a sudden, it's now trading at 184. It was in the 229 to. Well, that's a pretty serious pullback, 12%, I think. All right, so that's that. Now the next question came in. I hear music in the background. Yeah. So what's working is the J&Js, the IBB. This is the look at that peak C at 164.60, down 68 cents. And the IBB Nasdaq Biotech area and XBI. Is that what it is? Yeah, XBI, AB, leg B in the daily chart.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So let me just do this quickly. So IBIT, question came in, is it worth a trade in IBIT? That's the iShares Bitcoin Trust. We still have it. We're long for much lower down. I was hoping that we could just keep it for the next big move to the upside. So we've taken lots of nice profits and we've kept some small core. And I'm going to stay that way because, I mean, really, 52 right now. It was at 71.20. 20 points. This is about a third down. So, yeah, as a trade, I'm just, when the trend is down, you're going to have to be really quick. And if you're doing it just to make a little money, usually you lose a little money or a little bit more than a little bit more money. So I'm just going to say to you, let me just do this real quickly here. I've been talking negatively about Bitcoin for a long time. Oh, as a trade, you could just grab it now at 52.76, 53.78 is the 200-period exponential moving average. If that's the kind of trade you want, I'd say do that right now, but I would have a stop on the very short term of 52.58. I wouldn't even play games. It just has to work right now between 10.20 and 11:38, 11:40 in that period, and then you can raise a stop or just take something out. Okay, so it's back up and running. So let's just go back to what we were looking at here, Tiger chart, Tiger chat. Okay, so within the context of where we are, what are we looking at? We're looking at this negativity broadening out. A statement came in about Microsoft. Yeah, Microsoft took out the base that I said had to hold. We're along from way down 338, not doing anything until there's going to be. We've built up a really good position in cash, and I'm happy with that. I want to wait, and when we get our buy signals, we'll start putting in money. And this time, rather than going one at a time, I might have 3 or 4 or 5 or even 6 positions the day that I want to get back into the market. I love that when it works. It doesn't work, it doesn't work. But I'm not sure how I'm going to do it, but you've got to be ready. And the way I'm looking at it, if I'm correct about that VIX index saying the 28th of November could actually be a turnaround,